Hi all, welcome to the weekly market wrap for the week. We'll take you through the key market events that have panned out over the week. Past few days, we saw release of various high frequency indicators in domestic and in international market. Most notable one being the Fed rate hike in US. They raised its benchmark rate by 75 basis points, the biggest increase since 1994, to a range of 1.5% to 1.75%. The buzz of 75 basis hike was going on for 2-3 days in the market, and Fed delivered as per market expectations. Further, the market saw a relief in Fed chairman's statement where he stated that such unusual large hike won't be a common scenario, and further added that there could be room for another 50 to 75 basis points hike in July meeting. The Swiss National Bank also increased its policy rates to negative 0.25% from negative 0.75%, the level it has deployed since 2015. The hike was the first increase by S&P since September of 2007. The Bank of England also on Thursday hiked its main interest rate for the fifth straight time, as it forecasted British inflation to soar further this year to above 11% levels. BOE policymakers agreed to increase the cost of borrowing by quarter point to 1.25%, the highest level since the global financial crisis. In India, a week before, RBI hiked the repo rate by 50 basis points, and we have seen rate hikes being carried out by other central banks across the world, with an exception of China. The goal with these rate hikes is very clear. It's the race to get inflation under control, and central banks across the world, including India, look very committed with their task in hand. The Indian WPI for the May 2022 printed at 15.9%, higher than previous month's reading of 15.1%. This is the highest year-on-year reading in the series so far. WPI core inflation stood to 10.4% as compared to 11.1% previously. The CPI inflation for May 2022 printed at 7.04%, lower than the previous month's reading of 7.79%. The headline CPI reading has been beyond RBI's tolerance level band of 6% for the fifth consecutive month now. IIP, that is Index of Industrial Production for April 2022, was printed at 7.1%, higher than the reading of 2.2% in May 2022. INR closed marginally stronger at rupees 78.07 per USD as compared to rupees 78.22 per USD at the start of the week. Elevated crude oil prices and a slump in domestic equity market weighed in on the rupee. Let's have a look at market overview for the week. The evident bearish mood is how market chose to react on the Fed announcement. Major indices around the world were in negative this week, with Eurozone suffering the most. Our benchmark indices Nifty and Sensex were also down by 2.7% and 2.48% respectively. The benchmark indices from the top level at the start of year now has already slipped by more than 14% on YTD basis. Indian market took a plunge across market caps and sector segments. Small cap took the biggest beating. Pharma was the least hit but still saw the reading in red. On the debt side, the yields rose to 7.61% from the Monday closing of 7.52%, a 9 basis point increase. The anticipation of rate hike kept the yields on a rising trajectory, and we could see a gradual increase in the yields in the nearer term. In conclusion, along with the world, India too is struggling with its inflation worries. We have seen RBI's focus now shift to inflation from growth. We envisage that RBI will keep its focus on inflation till crude, geopolitical, and COVID fears start to fade away. One of the major tasks of central bank is to manage the right balance between growth and inflation. We continue to believe RBI will be at the forefront to efficiently manage the yield curve by taking proactive steps to battle the prolonged pandemic fears, rising inflation pressures, and making sure there is room for long term growth of the economy. We expect the 10-year GSEC to be in the range of 7.5% to 7.7%. We recommend investing in medium-term investments with a buy and hold strategy. A bond, if held till maturity, does not get affected by market movement whatsoever. Further, we must remember to have a productive long-term investment journey. There is no alternative than to have a right asset allocation. Rest all parameters hardly drive investors' returns. It becomes even more important to have a right allocation strategy as per one's risk appetite in times like these. Thank you.